after sinking in last week's report from Hindenburg Research that accused Adani of fraud and stock price manipulation.
India's Adani Group says it's exploring legal action against a US short seller, Hindenburg Research, after its report accused the company's firms of accounting fraud. Adani Group says the report was, quote, maliciously mischievous and unresearched.
Response to the report, which clearly establishes with documentary evidence that its report is just full of misrepresentations.
Just as fast as Gautam Adani added billions of dollars to his personal wealth, he is losing it all at a faster pace. The meteoric rise of Gautam Adani is something the world has never seen before. His personal wealth was less than $10 billion in 2020, and by the end of 2022, his net worth increased to $137 billion. In just 3 years, he added more than $100 billion to his coffer, with $61 billion of that coming from a single calendar year 2022. It took 20 years for Adani to make his first $1 billion, and he made more than $100 billion in just 3 years. The massive increment in his personal wealth earned him third place on the Forbes billionaire list, making him the first Indian ever in that position. All the stars were on his side, and it seemed nothing could stop him to make record after record in business dealings. But his rise was suddenly put to rest after a short seller company called Hindenburg Research published a blistering report claiming that Adani Group was pulling the largest con in the corporate history. After the report, the Adani Group of companies, which includes ports, energy, airport, cement and media, lost more than $50 billion in just 3 days. In total, his company has lost more than $100 billion, which is equivalent to 18% of the recently announced annual budget spend of India. With this loss, he is also out of Forbes' top 10 richest list. At the time of making this video, Adani slipped to 15th on the Forbes rich list with an estimated fortune of $75.1 billion. So, to understand what is happening between the Adani Group and Hindenburg Research, we first need to understand what is Hindenburg Research. As an American company, why it is so concerned about the Indian conglomerate, and what are its major allegations and how Adani Group has responded to those allegations. Hindenburg Research is a New York-based research firm which was founded by Nate Anderson in 2017. By profession, Anderson is a certified financial analyst, and his firm specializes in forensic financial research. So what it basically does is that it uses its deep financial auditing skills to investigate for any financial irregularities that are hard to find for an ordinary people. Hindenburg Research borrowed its name from the Hindenburg disaster, which was an airship accident that occurred on May 6, 1937 in the US. And that disaster is characterized as a human-made avoidable disaster. Hence, Hindenburg Research looks for similar kinds of human-made disasters in the financial markets and exposes possible frauds. The investigation process is a time-demanding task and often takes from several months to years, after which it publishes the findings on its website. In Adani's case, Hindenburg Research took 2 years to build its case, where it accuses Adani Group of engaging in stock manipulation and accounting fraud over decades. Hindenburg is so confident about its work that it has challenged the Adani Group to take legal action if it thinks that the findings in the report are wrong or misleading. So, the question is, why an American firm spent 2 years only to accuse one of the world's richest people and India's most respected business house? To understand this, we need to understand the concept of short selling. In the financial market, short selling or shorting takes place when investors bet against the share price of the companies that they find overvalued. Let me give you an example here. There is an XYZ company which stock price is currently trading at Rs 500 per share. Somehow you came to know that the share price of Rs 500 is overvalued and should be less than that. Now what you will do is you will borrow some shares from the broker and sell it at the current price. Let's say you borrow 1000 shares and sell them at Rs 500 per share for total proceeds of Rs 5 lakh. After a certain time, the share price of XYZ company fell to Rs 300 as expected. Now, you will buy 1000 shares for a total of Rs 3 lakh and return it to the broker. In the end of the transaction, you will book a profit of Rs 2 lakh. This is what Hindenburg is planning to do with Adani Group companies as well. Hindenburg has disclosed that it has maintained a short position on Adani securities through US traded bonds and derivatives. If the price of the Adani stock falls as predicted, Hindenburg stands to make a huge profit out of that. Given the size of the Adani Group, the expected profit for Hindenburg would be in millions of dollars. Now we know how Hindenburg is planning to make a profit by betting against the stock price of the Adani Group. But out of all the conglomerates which are as big as Adani Group, why it targeted Adani Group only and not others? See, firms like Hindenburg choose companies that seem suspicious in their financial activities. In the case of Adani Group, it was its extraordinary growth in the last 5 years and the way of financing that growth. Now let's have a look at how Adani Group has grown over the years. In just 1 year from 2020 to 2021, the market cap of 6 listed Adani Group companies has grown over 5 times from 1.64 lakh crore to 8.5 lakh crore. Even more surprising is its growth in the last 3 years. In less than 3 years from the end of 2019 to 2022, the market cap of Adani Group increased from rupees 2 lakh crore to mind-boggling 20.74 lakh crore. According to the ATI's database, the company added 56,700 crore every month to its shareholder wealth. For someone who is not familiar with the term market cap, it simply represents the total market value of the firm and is calculated based on the current market price of the shares and the total number of shares trading on the stock exchange, which is also called the outstanding share. Let's say the same XYZ company has a total of 1 million shares currently trading on the stock exchange at the price of rupees 100 per share. Based on this, the market cap of the XYZ company would be rupees 100 million. Now if you look at this table compiled by the Hindenburg in its report, we can see the astronomical gain in the share price of the 7 key Adani listed companies. In the last 3 years, the share price of Adani Total Gas has shot up by more than 2000%, Adani Enterprises by 1400% and Adani Green Energy by 908%. The extraordinary growth in the share price of Adani listed companies also increased the personal wealth of Gautam Adani. In the last 10 years, Gautam Adani's wealth has grown by 1830% according to the Hurun Global Rich List. Just to give you a perspective here, Mukesh Ambani's wealth has grown by just 400%. Now comes the financing part of the Adani Group of companies. In 2018, the group announced the future expenditure of 167,000 crores to be spent on acquisitions, new businesses and existing businesses. For 2017-2018, Adani Group reported an EBITDA or earning before interest, tax, depreciation and amortization of rupees 23,000 crore. After paying interest, tax and adjusting depreciation and amortization, the net profit would be even lesser than that. So, the big question here is how on earth it is able to fund the capital expenditure of 167,000 crores if its profit is just in thousands of crores. Now this is where the role of the high price of stocks of listed companies of Adani Group comes into play. To understand it in better terms, we need to understand the concept of pledging. Let's take an example here. You want to start a new business that requires an investment of rupees 1 crore. The problem is you have only around rupees 20 lakh in cash. But you also have a property of around rupees 1.5 crore. Now, what you will do is, you will go to a bank and use that property as a collateral and get rupees 80 lakh in loan. This is a riskier method of raising funds. If your business does not generate enough cash flow to pay the interest and capital, the bank will eventually sell your property to get the cash it had given to you. Similarly, in the financial market, companies can place their shares as collateral in banks and raise the required capital against those pledged shares. Adani Group purchased Holcim Cement for $10.5 billion and to finance that purchase, it has pledged all the shares of Holcim Cement. This table in Hindenburg's report shows how much promoter shares of listed companies are pledged to raise the fund. 5 of the companies of the Adani Group have pledged their promoter shares, with Adani Power at 25% and Adani Ports at 17.31%. Higher the stock price, higher will be the loan the company could get from the pledged shares. Again, this is a riskier method of raising funds. If the share price drops, banks can make a collateral call, and if the borrower company cannot pledge additional shares, the bank will sell those shares. This will further reduce the price of the shares. This is all about the growth of the Adani Group and how it has financed that growth. Now let's discuss Hindenburg's allegations about the Adani Group and how it has defended those allegations. One of the major allegations is about stock price manipulation and using it as a collateral to borrow loans. Public listed companies in India are required to distribute 25% of their holdings to the general public to ensure a minimum level of liquidity, reduce insider trading and market manipulation, and minimize volatility. But Adani Group, according to Hindenburg's report, is using shell companies to evade this rule. This table shows the key suspicious foreign companies holding Adani stocks. Funds like APMS Investment, Cresta, LTS Investment and Elara India have invested the majority of their funds in Adani stocks. In addition to the promoter share of 75%, if these funds are also owned by Adani Group, it will eventually create a shortage of stocks, which eventually increases its price. To this allegation, Adani Group has responded that the mentioned offshore companies are not related parties of the promoters. As a listed entity, Adani Group does not have control over who buys, sells or owns the publicly traded shares, or how much volume is traded, or the source of funds for such public shareholders. Adani Group also disclosed its promoter gross pledge position, which shows that the group has significantly reduced the promoter stake pledge in 2022. For instance, Adani Ports and SEZ, Adani Transmission Limited and Adani Enterprises had promoters stake pledge of 58%, 54% and 50% respectively in 2020, and that has reduced to 17%, 7% and 4% at the end of 2022. Hindenburg also criticized Adani Group for appointing Rajesh Adani, younger brother of Gautam Adani, and Samir Bora, Gautam Adani's brother-in-law, in top managerial positions even after their involvement in criminal activities such as evading customs and diamond trading scams. Adani Group responded to this allegation by saying that all the allegations against its directors are closed and dismissed in their favor. Hindenburg also raised questions about the appointment of a tiny audit firm called Saha Dandaria and Company, which only had 4 partners and 11 employees, to audit big companies such as Adani Enterprises and Adani Gas. Further, it also revealed that the 3 auditors in that audit firm were just 23 years, 24 years and 28 years old, and questioned their ability to properly scrutinize the financials of the firms controlled by one of the world's most powerful individuals. To this allegation, Adani Group said that all the auditors of its companies are duly appointed in compliance with the applicable laws. It criticized Hindenburg for reporting something which has already been disclosed to all regulators and stakeholders. Overall, Hindenburg raised 88 questions and asked Adani Group to address all those questions, which it did by releasing 413-page responses. Hindenburg has a strong track record of exposing corporate fraud patterns, and in the case of Adani's group, Bill Ackman, one of the renowned investors of Silicon Valley, also endorsed the Hindenburg's report and said it was highly credible and well-researched. Adani Group has called Hindenburg report a malicious combination of selective misinformation and accused it of greed to book profit at the expense of normal investors. But the response from Adani Group is not sufficient to pacify the investors who are panicked after the release of Hindenburg's report. The company is losing billions every day with no signs to stop anytime soon.
We now shift our focus to fresh risks for Indian tycoon Gautam Adani. Since last month, Adani firms have lost more than $120 billion in market value. And there seems to be no end in sight to Adani's ongoing issues.
If you think my content is adding value to you, please subscribe my channel and share it to your friends and families. It will mean a lot to me and my team. Thank you. I'll see you in the next one.